Stock market investors have had a rough time in the last 2 months ever since President Donald Trump started talking about and started implementing policies reducing international trade, policies like tariffs that the president has placed on several of the United States trading partners. Those policies have created a ripple effect and created a lack of enthusiasm, and investors have sold off some stocks. But that's also created some opportunities to buy great companies at cheaper prices. And in fact, in this video, I'm going to highlight 3 undervalued growth stocks you can buy now in May.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So first of all, let me describe what you're looking at. This is my proprietary discounted cash flow valuation model that I use to calculate the fair value of a business. Now, I use several estimates and assumptions to come to these conclusions. I use estimated free cash flows. There's a lot that goes into these calculations. And if you want to know a breakdown and you want to see dozens of these videos, you can join my channel as a member where I have many of these breakdowns. For IBM, I'm going to focus on the outcome of these calculations. The intrinsic value per share is $343. The current market price is $245. So there's significant undervaluation. Now remember, the intrinsic value per share is the value that I believe this business is worth today for me, for my personal investment criteria. I've input estimates and assumptions that are my estimates and my assumptions, and this is the value I believe this business is worth. Now, the company is trading close to its 52-week high of $266, but that's because IBM has outperformed expectations in recent quarters, and it's generated significant growth in its AI division. And of course, investors are falling in love with businesses that are generating revenues from artificial intelligence. The next stock I'm going to highlight that's significantly undervalued is Reddit. Reddit recently announced quarterly results where they added 9 million monthly active subscribers or monthly active users from the United States. This segment for social media users is the most lucrative and most sought after user because marketers like to target users from America. They have greater purchasing power. So marketers are willing to pay a higher price to show advertisements to folks from the United States. Reddit is among the best. In fact, I think it is the best in terms of percentage year-over-year increases in monthly active and daily active users from the United States. Much better than Snap, which actually reported a decline, much better than Pinterest, and much better than Meta platforms on a percentage year-over-year basis. So investors are getting excited about the potential for Reddit because it's smaller than those others that I mentioned, and it's growing much faster. In fact, revenue growth was over 60% in the most recent quarter. And so when I took the present value of all of the free cash flow I expect this business will generate between today and the very long run, that came to be a very robust $31 billion. And when I made all of my calculations and came to the conclusion the intrinsic value per share came to $260. The current market price is less than half of that at $113. So this business is nowhere near the 52-week high, which was $230, and the 52-week low was $46 per share. Boy, was that a steal if you were able to buy Reddit stock at $46 a share. Still, even at $113 a share, I think Reddit stock offers great value for long-term investors that are looking for a business in the social media segment, which is one of my favorite segments to invest in. I think the user-generated content business model is one of the best business models, especially if you can scale that business model, which Reddit has done and it continues to do. So this business at the current market price, I think, is significantly undervalued. And last but not least, Amazon. Amazon, the present value of the free cash flow that I expect Amazon will generate between now and the very long run is a whopping $2.7 trillion. Amazon is a cash flow generating machine. It's one of the highest cash flow generating machines in the world today. The company has several segments, including e-commerce, artificial intelligence, cloud services, streaming content, etc. And it's one of the best in each of the categories it operates. It's certainly the best in cloud services. It's certainly the best in e-commerce. It's among the leaders in streaming video. It's not the best, but it's up there. It's one of the best. And the company is just really good at what it does. The management team is excellent. They've dealt with several unprecedented circumstances and have handled them effectively just in the last 5 years alone. Now, the business is impacted by increasing tariffs, but the large size of its operations and flexibility will allow Amazon to weather the storm relatively well compared to other providers in the space. For instance, Temu and Shane, they're going to experience a huge decrease in revenue as a result of tariffs and the exclusion of that de minimis provision, which allowed these companies to ship products to the United States without paying any duties on them as long as the order was less than $800. So that's going to hurt their business big time. Amazon is likely to benefit from the removal of that provision. So there's going to be an offsetting impact, right? Amazon is going to suffer from the higher tariffs, but on the positive side, it could benefit as a result of the removal of that de minimis provision, which will hurt Temu and Shane a lot more than it will hurt Amazon. And so that'll allow it to gain some market share that it's lost to those companies in the last year and a half or 2 years. It's lost a lot of market share to those companies. And so the intrinsic value per share I calculated for Amazon is $256. The current market price is $190. So at that price, I feel Amazon stock is significantly undervalued. Now, the 52-week low was 151. The 52-week high was 242. So it's trading at a range at about the middle of that 52-week low versus high. So these three stocks I've highlighted, they do have risks. Every stock has risk. If anybody tells you that this business is a no-brainer, it doesn't have any risk, you should run away because every investment has risk. There's risk versus reward. You, as an investor, should not be afraid of taking risk, but what you should be is willing to and looking to be compensated for taking risk, meaning there is sufficient upside to compensate you for taking the risk that you could potentially lose your money in any of these investments. So these are three that I think are undervalued that you can add to your portfolio.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.